Good evening all. Ira Epstein of Linn & Associates with your metal market wrap-up. And this wrap-up is for Tuesday, the 6th of July, 2021. We're just at 6:15 p.m. Central Time. Now, before I go any further, tomorrow we hold our What's Up live webinar. So if you'd like to come, you're going to see up here at the top an icon. Just click on it at any point if you didn't sign up for it already. That's the form. When you click it, it'll take you to the area you fill out. You can get into it as early as 12:15 p.m. It starts promptly at 12:30, so I give you 15 minutes to get in. If you have questions, you can also send them to me now at Epstein at Linn, that's LINNLLC.com, and it's Epstein, IEPSTEIN. All right. So let's go to the markets. You know, the gold market took off this morning and gave everything up. You saw the dollar hold on to some gains today. The euro got hit fairly hard along with other currencies. Here's what's going on. The market keeps looking at the bonds and notes and it keeps saying to itself, what the heck is going on? Why did we go down to under 136 today in the 10-year note and the yield, closing just by that? What's going on with $75 crude oil? The market looking at that. What is the meaning of OPEC in terms of they didn't reach an agreement, so oil's thought to go up, and then why the sudden reversal? Big one today. Well, let's just deal in the metals here first, and in the financial markets, I'll cover the rest. Gold is of no surprise to me fighting at the 18-week moving average of closes. When we corrected, I said I thought it would go down there. To see it back up there right now, no surprise at all. When you look at the gold chart today, you certainly got up nicely, as you can see, near the 1820 level, got up to 1815, 17, fell back, but not bad. You still were up on the day, and the market's not in a downtrend. You have a lower low, higher high. So where did the market go to? Ta-da! The 18-day average of closes fell back, finding support at the 100. So if I eliminate today, this is how you looked on Friday. Today's action, rally, what do I tell you the first time you hit an 18-day average? That should be your resistance. If you hit it and you fall back, the support theoretically should be the lower moving average, and that's exactly what you're fighting in right now. When you look at the Bollinger Bands, you're nowhere near them. So the fact that the gold got up to this resistance is fine, but the next level's 1839.40. Are you trending? No. Where's the bias? There is none. You got a lower low, higher high, and for all purposes, you're trading just, well, I guess you can say slight downside bias since you're under the 18-day average of closes at this minute. Momentum turned up, getting away from an oversold condition that occurred when? This is the close on Friday. You lost the bearish embedded reading. The real objective's just the closest main moving average. In this case, it had hit at the 100. Often you'll go to the 18. You went there today, and that's right where you failed afterwards. When you look at the gold-silver ratio, silver's losing to the gold temporarily. So gold got stronger than the silver. When you look at silver, and we want to come back here and get you caught up, this is Friday's action. So the market had a lower low, higher high, was still oversold, resistance formidable at the 100-day average in green and the 18-day average. You went to them again today, you fell back, and now you're still fighting that battle. In addition, you had a bearish crossover. The 18-day average got underneath the 100. That's not a pretty picture for the longer term, so be careful right there. Support under the market begins at the 200-day moving average in gray, and if the market were to totally collapse, the lower Bollinger Band. Let's assume it goes up. Okay, if you clear 2691, you still got to bend that 18-day average back over the 100. It's not going to be a pretty picture, and that would not set up a new uptrend because you'd still have the lower and low, higher high scenario. In the copper market, you took off into the 440 range. This morning, if you're one of my subscribers, at 5:40 in the morning as I'm doing the recording, I know I'm saying to you, be careful here. That's going to attract the Chinese attention. They'll be talking those auctions again. Well, that gave up, and you're right back down to 425, 15-cent drop. I wasn't too off on what I thought. But more important, this is what I was looking at. Here's Friday's close. First challenge of the upper 18-day average often gets met met with some resistance, and that's basically what happened. Could you get a bearish crossover here where the 18's getting the crossover the 100? Yeah. So you got to be careful. You get under 422.65, 410 could be a number the market gears up on. In the platinum market, momentum is flat. You have a lower low, higher high, and you're just fighting against that 18-day average, basically. No surprise there. The strength of the market has been in the palladium market. It's had the higher highs and higher lows. This is how the market looked on Friday. But it is overbought. Overbought means you're getting long in that tooth. Be careful here. And you could see how the market reacted. It got up nice and high to 28.79 and gave back almost $1 of that, $100 of that gain, rather. That's monstrous money. So be careful. Too overbought to get overexcited. Should it extend the rally, I'd look for the upper Bollinger Band. Dollar index, you now have a pattern of higher lows, higher highs, and outside day up. A warning sign would be if you take out today's low on Wednesday or Thursday. Tomorrow we're going to get, if I'm correct, the FOMC minutes. So everybody will be reading that, but I don't see why that should be that bearish. Plus you have an embedded reading. I think you're still going to see traders step in and buy the dollar, looking to see if they can get it up to the upper Bollinger Band until that embedded reading is lost. And last, in the Ethereum, you can see where you've got finally the 100-day average of closes is showing. So between the 18 and that's your resistance point. Trend up, bias up, market getting at this point in time, knocking on the door of being overbought. I hope to see you all tomorrow, 12:15. I'll open up, and that's Central Time. I will open up the chat room. Look for you there. Take care.